In this video, you will learn about the 3 options available to a taxpayer once they receive an audit notice from the Internal Revenue Service, or IRS. As a tax preparer, it is important to understand these options so you can guide your clients through the process efficiently and effectively. We will discuss how taxpayers can respond to the audit letter, the steps to take if they need to amend their return, and the consequences of not responding at all. Option 1. Responding to the audit letter. The first option available to a taxpayer who receives an audit notice is to respond to the letter. When the IRS initiates an audit, they send a letter detailing the items being reviewed and requesting specific documentation or explanations. As a tax preparer, your role is to help your client understand what is being requested and assist them in gathering and submitting the required documentation. Review the audit letter. Begin by carefully reviewing the audit notice. Determine what specific issues the IRS is questioning. This may include income discrepancies, questionable deductions, or eligibility for certain credits. Gather supporting documents. Help your client collect all relevant documents. This might include receipts, bank statements, W-2 forms, 1099s, or any other records that support the information on the return. Write a clear response. Prepare a clear and concise response addressing each issue raised by the IRS. Attach all supporting documents and organize them logically. Clearly label each piece of evidence to make it easier for the IRS agent to review. Submit by the deadline. Ensure that the response is submitted by the deadline indicated in the audit letter. Timely responses are crucial and can lead to a quicker resolution. If the documentation you provide satisfies the IRS's concerns, the audit may be resolved with no further changes to the return. However, if they have additional questions or find discrepancies, the IRS may request further information or propose changes to the tax return. Option 2. Amending the tax return. The second option for a taxpayer is to amend their tax return if they discover or are aware of errors after receiving the audit notice. As a tax preparer, you may review the audited return and identify mistakes that need correction, either because the IRS pointed them out or you discovered them during your review. File Form 1040X. If you need to amend the tax return, you will use Form 1040X, Amended U.S. Individual Income Tax Return. This form allows you to correct any errors, omissions, or misreported items on the original return. Provide an explanation. When filing an amended return, it is important to include a detailed explanation of the changes. Clearly state why the changes are being made and include any supporting documentation that validates the corrections. Communicate with the IRS. Inform the IRS auditor handling the case that an amended return has been filed. Provide any additional documents needed to support the changes. This proactive step demonstrates good faith in correcting errors and may lead to a favorable resolution. Amending a tax return can reduce potential penalties if errors are identified early. However, if additional taxes are due as a result of the correction, interest and late payment penalties may still apply. It is important to inform your client of these potential consequences. Option 3. Not responding to the audit notice. The third option, and one that should always be avoided, is not responding to the IRS audit notice. Ignoring the notice can have serious consequences for your client, and as a tax preparer, it is your responsibility to ensure that your clients understand the risks involved. IRS determinations without taxpayer input. If your client does not respond, the IRS will proceed with the audit based solely on the information they have. They may make adjustments to the return, disallow deductions or credits, and assess additional taxes, penalties, and interest. Assessment of additional taxes. In most cases, the IRS will assume that the taxpayer's failure to respond means the adjustments they proposed are correct. This can lead to the taxpayer owing a significant amount of additional tax, as well as penalties for non-compliance or negligence. Collection actions. If the taxpayer still does not respond or pay the assessed amounts, the IRS can initiate collection actions. This may include placing liens on the taxpayer's property, levying bank accounts, or garnishing wages. Loss of appeals rights. Failing to respond can also result in the taxpayer losing the right to appeal the IRS's findings. This means they cannot contest the decision administratively, which severely limits their options for challenging the assessment. Best practices for tax preparers. As a tax preparer, you play a critical role in helping your clients navigate an audit. Always encourage timely responses and provide the necessary guidance to either submit the requested documents, amend any errors, or communicate with the IRS effectively. Ignoring an audit notice is never an option and should be addressed immediately to avoid serious financial and legal consequences. By understanding these three options, you can help your clients make informed decisions, minimize penalties, and work toward the most favorable outcome possible during an IRS audit.